All right, let's dive right into the heart of modern Wall Street. We're talking about a place where artificial intelligence isn't just a buzzword, it's completely rewriting the rules of the game. Now, this is a story about incredible, almost unbelievable power, but it's also a story about huge and sometimes really well hidden risk. To really get a grip on AI's role in the market, you have to start with one thing: speed. We're talking about automated trades that happen in nanoseconds. That's billionths of a second. It's a timescale so fast that our brains literally can't comprehend it. And when you're moving that fast, AI isn't just helping people out, it's replacing them entirely. And that, of course, brings us to the big central question. When we hand over the keys to our financial systems to these super fast, constantly learning machines, what could possibly go wrong? To answer that, let's first look at the incredible promise of this technology, because it really is something else. We're talking about a leap in trading capability that you can only really describe as superhuman. Okay, so to see the real shift here, you have to understand the difference between static and dynamic. See, the older trading algorithms were static. They were based on rules written by a human. If the market zigged when it was supposed to zag, a programmer had to go in and manually rewrite the code. But modern AI, it's completely dynamic. It learns, it adapts to new market conditions all on its own, and it does it in real time. The engine that's driving all of this is a technology called reinforcement learning. The easiest way to think about it is like training a dog, but for an incredibly smart algorithm. So instead of just feeding it a ton of data and asking it to find patterns, you give it a goal, like make as much profit as possible. And you let it learn through pure trial and error. It gets rewarded for good decisions and penalized for bad ones. So here's how that feedback loop works. The AI agent, our little trading bot, it looks at all the live market data. Then it makes a move, buy or sell. Based on what happens next, did it make money or lose money, it gets a reward or a penalty. And this loop just happens over and over and over, thousands of times a second, allowing the AI to constantly fine-tune its strategy, getting smarter with every single trade. And the results of this constant learning are just wild. We're seeing major financial firms use these systems to optimize trades across dozens of different exchanges, finding these little hidden pockets of liquidity that no human would ever spot, and slashing transaction costs. And at the very same time, AI is also being used for market surveillance, spotting weird anomalies that could be a sign of trouble. But, and you knew there was a but coming, every promise has its peril. This massive computational power also creates brand new and pretty dangerous vulnerabilities. And that brings us to the other side of this story, the risk of high-speed crashes and deep, deep-seated bias. The risks really fall into two main categories. On one hand, you've got these huge systemic failures. These are market-level risks where all these complex, high-speed systems interact in ways nobody can predict, leading to sudden crashes. And on the other hand, you have algorithmic bias. This is a much more human-level risk, where the AI systems end up perpetuating or even amplifying unfair discrimination. The 2010 flash crash is really the textbook example of systemic failure. In just a few minutes, a single, large automated sell order set off this cascade of other algorithms reacting to it, and it wiped out nearly $1 trillion in market value. Then, just as mysteriously as it started, the market bounced back. It was what experts call a normal accident. Basically, an inevitable failure in a system that's just so complex and so tightly connected that no single person or algorithm is really in control anymore. Now, that second danger, well, it's maybe a little more subtle, but just as damaging. See, when we train an AI on historical data, we're not just feeding it stock prices and figures. We're feeding it a perfect record of all of our own human societal biases. The AI learns those patterns, and then it can apply them at a massive scale, leading to really unequal treatment in everything from who gets a loan to who gets hired for a job. A landmark case of this was an algorithm called Compass. It was used in the U.S. justice system to try and predict how likely a defendant was to reoffend. And in 2016, a huge investigation by ProPublica uncovered a shocking bias, which this quote just makes devastatingly clear. The data showed this incredible disparity. The false positive rate, which just means wrongly flagging someone as high risk who did not go on to reoffend, was almost double for Black defendants compared to white defendants. This isn't some small statistical quirk. This is a stark, life-altering difference baked right into the code. So you might be thinking, why is this so hard to fix? Well, it comes down to something called the fairness trade-off. The people who made Compass argued that their model was fair, just by a different metric. basically that its predictions were equally accurate for all groups. The problem is, you literally can't mathematically satisfy all the different definitions of fairness at the same time. If you optimize for one, you can actually make the system less fair by another. It's a huge ethical and technical mess. And listen, this is not just a problem in finance or the justice system, it is everywhere. When early versions of the image generator DALL-E were asked for a CEO, 97% of the images it made were of white men. Google's Gemini AI generated historically inaccurate images that caused a massive drop in its market value, and OpenAI's video model Sora sometimes just plain ignored prompts to create videos of people with disabilities. Bias is a fundamental challenge for all of AI. So faced with these enormous risks, what are we doing about it? Well, the third act of this story is all about the attempt to build both human and technical guardrails around these incredibly powerful systems. One really powerful idea actually comes from studying organizations that manage insanely risky technologies without failing. Think about aircraft carriers or air traffic control centers. It's a framework called high reliability organization theory, and the core idea is simple. Accidents aren't inevitable. They're the result of bad management. You can actually design an organization to be safe. These HROs, as they're called, they run on 5 key principles. They are totally preoccupied with failure, always looking for tiny errors. They refuse to accept simple explanations for problems. They are super sensitive to what's actually happening on the front lines. They build in resilience so they can bounce back from trouble. And maybe most important, in a crisis, they defer to expertise, not to who's highest on the org chart. And there are trading firms out there, like Tyler Capital, that are actively building their whole culture around these exact principles. But you know, a great organizational culture can only get you so far. We also need technical solutions. So instead of just trying to filter out bad AI outputs after they happen, there's a new approach that tries to build the ethics in from the very beginning. It's called constitutional AI, and it was pioneered by the company Anthropic. The idea is to actually train the AI model on a set of core principles, a constitution, that's drawn from sources like the Universal Declaration of Human Rights. The goal here is to make the AI inherently aligned with human values, instead of just teaching it a list of bad things not to say. So where does all of this leave us? Well, we're kind of caught in this fundamental dilemma, right? It's a constant balancing act between the immense power that AI offers and the really profound risks that it creates. And here's the real takeaway. The global economy is becoming fundamentally dependent on AI to drive growth, and that creates this massive vulnerability. We absolutely need the power that AI gives us, but to use it safely, we have got to find ways to manage its risks. It's not optional. Which leaves us with one final and, I think, really crucial question. Right now, our AI is basically a mirror. It just reflects back all the patterns and biases of the world as it currently is. The ultimate challenge, then, is this. Can we turn that mirror into a blueprint? Can we actually build an AI that helps us create the more equitable and more stable world that we all aspire to have? Thanks for joining this explainer.